Hello, everyone, and welcome to our first student housing webinar today on July 15th, 2020. My name is Megan Furr, your producer for today's program. We are joined today by our hosts Jeff Adler, Jack Kern, and Chris Nebenzahl. During today's broadcast, we will comment on the current state of the student housing industry. Our program will run about an hour, and we hope you can stay with us for the entire broadcast. We want this to be an interactive conversation, so please feel free to submit questions in the comment section on your screen, and we will try to respond to your messages while covering relevant topics. If we don't get to you, please contact us afterward for a more detailed answer. A recording of this broadcast and accompanying slides will be available after the program. Please note that we will be sharing our viewpoint with you on a lot of levels, and what we discuss may or may not be relevant to your situation. Please read the disclaimer carefully and consult your tax and investment advisors before making any decisions. Now, I am pleased to welcome Jack Kern, Director of Research, Chris Nebenzahl, Institutional Research Manager, and Jeff Adler, Vice President of Yardi Matrix, to our program today.
Thank you, Megan, and thank you all, everyone, for joining me today. As I kind of lay this out and you see the agenda, what I really want to do first is maybe set the table in terms of fundamentals around student housing and kind of what the landscape looks like, and then we'll layer in on top of that COVID-19 and related sort of short-term impacts. A word to all of you, as always, all of you will get a copy of the slides and a recording of the broadcast, so there's no need to worry that any of these sort of gems of insight you'll miss. So, and of course, as questions occur, we'll break in the middle, and as always, Chris and Jack keep me honest. So let's kind of get into it then. With this webinar, we are formally launching our student housing data service, which we've been in kind of pre-sale mode for a little bit, as well as our formal coverage of the subsector. Now, in terms of kind of how we kind of view things right now, as always, we give you the answer first and then tell you how we got there. Universities are struggling financially. There are state funding cuts, there's less international or out-of-state students, or there's quite a bit of movement in where that's going to land, and they typically do pay a premium and are those profitable students. Schools are forced to rely more on tuition, and most universities have decided really need to reopen. I find sort of the Harvard decision a little interesting and counterintuitive. Most students seem to want to go back to campus, and based upon the Preleasing data that we're looking at and we're tracking every month, it's happening. And interestingly, even among universities that are going to be online. National Prelease data is only a little bit below 2019 levels, and there is a very broad divergence across universities regardless of fall plans. So the college experience, no doubt, is going to change and has to change until there's a vaccine in place. And so this is really a fall semester issue and probably into the middle of the spring semester. While certain universities are struggling, we really are pretty optimistic about the dedicated student housing industry as a whole. But I would say here that based upon demographics, this has now gone into a market share game between universities, who's going to gain share among students. And it has always been a market share game in terms of the dedicated housing segment, taking share away from the shadow market. And that, I think, is going to continue and actually may prompt an issue about what's the next 10 years of development look like, and it may be quite a bit different than what the last 10 years were. So first of all, I really want to go back to the fundamentals of getting a college education. What's the value proposition? So first I'll note that the population of college-age kids is declining and is likely to continue to decline unless we see a dramatic increase in the birth rate or immigration rates, but this is pretty much locked in. On the other hand, the level of penetration of getting a college degree has been rising for the past 20 years, and so the result is that the sort of total universe of the population that's going to be getting a college education is flat, unless there is some reason that the college education percentage would increase. And it's kind of hard to see what that case might be, even though in terms of wealth creation, intellectual capital is the source of wealth creation in our economy, and a more highly educated population would be in our advantage if they also acquired the skills that made them more productive. On the other hand, what has been eroding, the value proposition is that, and this isn't news to anyone in the sector, the unbelievable growth in college tuition and fees compared to the overall CPI, 5 times more. And despite all of this, and if you look at the cost of tuition over the last 10 years, both in-state and out-of-state have risen at about the same rate. So it's not as if there's been sort of some subsidization of in-state tuition. That's really not occurred. But despite all of that, and maybe a result of where our economy is going, the return to getting a bachelor's degree is about 3 to 5 times the cost of obtaining that degree. And therefore, it is a good investment. Now, some work we have to do, I think it would be valuable in the future, would kind of focus on, this is an average across all majors, across all universities. Well, there is differences in return rates based upon the major as well as the university. And so some further analysis and segmentation will be warranted, particularly if it's a market share gain across universities, and with the cost of college tuition being so high, a greater degree of segmentation occurs and implicit economic analysis. Because of these trends, a college education has really become a luxury good. In some cases, a necessary good, but a luxury good. And so the off-campus, we look at the off-campus dedicated student housing industry, it's really been positioned to serve the top 10 to 20% of households, which are exposed to the total retail price of a college education. And what has occurred is the retail sticker price has gone up enormously, and the discounting has also gone up in order to attract favored demographic groups. And here's an example. If you're a resident of North Carolina and you went to Duke, that's $65,000, while UNC Chapel Hill was $17,000. That's a $200,000 difference. The real question is, as a parent, is Duke worth more than 3 times the amount of earnings value of an UNC graduate? So that's where private schools really have to sort of think about what is the value of their education relative to the state schools for an in-state resident. And so if you think about off-campus dedicated student housing, it has been tailored to either in-state parents or extremely affluent parents. We went for a luxury good, a better experience, and at the same time segmented their cost only to their particular bedroom lease. And again, this data would kind of indicate, we have this Yardi 200, which is essentially the top 200 universities, that you're not really saving money by going off campus, but you are having a better experience. And in many of the schools, there isn't the housing anyway to be on campus beyond your freshman year. So then it's a question of what quality of life do you have in your sophomore through senior years. Now, this is an example. If we take a look at the dedicated student housing stock, right? This is Tempe in Arizona State. There's 9,500 bedrooms, 20% of the total stock. In this case, the shadow market, which is a conventional assets in multifamily, are the real competition. And if we look at this in terms of distance from campus, you can kind of see here, this is just kind of the growth is. You can very much see that closer to campus, yes, there is a premium to be closer to campus, and it does seem to be logical in how it extends back. But income growth has actually been a little bit higher the further out, indicating a value proposition. So
Jeff,
this is clearly yes, Jack.
So go back one slide.
Yeah.
First, by the way, just a quick hello. This is Jack Kern. Nice to see everybody on the call. Thanks so much for joining us. Jeff, one of the things that we're noticing is that there's a lot of universities that are building ancillary campuses in a wide variety of locations away from the central university. Is that affecting the development ultimately of student housing?
It will, to the extent that there are particular programs, right, developed that they are self-contained campuses. Then they will attract students who are going to be attending those campuses. So they become, annexes and so forth. So yeah, it becomes another node of a university, much like a city, right, has a downtown and it has suburban urbanized nodes. So it's the same sort of thing, and we do track those as well.
Great.
So, it's in the mix. I'm just using Tempe as an example here of this happens to be a more urbanized node, but we have rural areas of University of South Carolina, Columbia, kind of a smallish town, so you have that as well. And then again, as an example here. So here, this is USC, not the California one, but the South Carolina one, where more of the stock is actually dedicated to student housing, very new stock, and less of it is the shadow market. But if you are in this industry, and the university is no longer gaining or expanding its enrollment base, then you're in a market share game, and you need to understand the shadow market, and the size of that shadow market varies, of course, by the campus, and that will inform you about what's the next level of development and at what price point you can achieve that. Again, here's a USC, and paradoxically, because of some of the new supply, the ones closer to campus still at a higher price point, but less income growth. If we look at, the reality is most students are using the shadow market, and we define this notion of capture opportunity. It's out here at the bottom. It's really the amount of supply that is not yet dedicated. So in this case, right, the Yardi 200, 64% of the students are not housed either on campus or with dedicated student housing. The majority is in some form of shadow market. It also could be the single family rental market as well, but it's not in either sort of official student housing, and that's even greater nationally. And it does vary by campus, and it does vary by conference. And so, we could put up all 200. It'd be a little hard to see the data on the slide, but that's really how you define where you're going to go play. And so now, as we kind of set this and say, now let's kind of layer on top of this what's happening with COVID-19 on top of universities. So the fact of the matter is, and this was before COVID, right? The vitality of a state's economy, its governance, its fiscal situation has always been a powerful driver of the ability of the state to support higher education, and the ability and the number of high-income earners in that state to send their kids to good state schools at in-state tuition, right, which is subsidized.
Okay. One thing on that point, though, are you concerned that about 20 of the states now have less than 50% of their population employed at the same level that they had a year ago, and that there's probably a significant decrease in the amount of money states are going to be able to put into state-run schools?
These schools are going to be under pressure. There's no question. And so this becomes a shakeout, right? Again, there was already a shakeout happening. This extends it. But a lot of these universities have been being weaned off of state support for some extended period of time, which is why they've gone to more international students, more out-of-state students, why they had expanded and have become more self-contained than they have in the past. So while the state charter has a state mission to support in-state students, the level of financial support has been steadily declining. Okay, so the university itself, think of it as much more of a contained business unit, but certainly it has been assisted by the vitality of the state's economy. To the extent that the state's economy is less vital, less growing, the greater the exposure, right? And so this favors, like the overall economy, the South and the West, to a lesser degree the Midwest, much less so the Northeast, Illinois, and California, right? So in that regard, it's kind of a carryover from the things we talk about in regular kind of conventional multifamily. And the fact of the matter is, among private colleges of long kind of standing, they've generally had sufficient. They're small universities with on-campus housing sufficient for their undergraduate students. And so this is really a function of the state school system network, which has grown, so significantly. And that becomes why, we cover 2,600 colleges and universities. Most folks have really focused on the top 175 to 200 universities as ones that are sort of investable grades. But we have data on way more than sort of the traditional kind of investment universe.
So on
The
this
weaker
slide, a typical question
sure.
with the parents is going to be, listen, Junior, I'm not sending you out of state anymore. You're going locally because that particular university or that particular state's got all kinds of problems. So are there any
Yeah.
particular states or even metropolitan areas where we feel like things are going to get much worse and it's not likely that the growth in rents or maybe even the growth in occupancy is going to be as strong as it will be in other places?
Well, we're going to look at specifically a couple things. We're going to look at lease-ups and how lease-ups are performing today across all these universities. We're going to look at states, universities that are heavily exposed to out-of-state students as well as international students, and that's where the most vulnerability is likely to be found. So yes, there is a resorting we think there's a resorting, but when you look at the actual lease-up data on off-campus dedicated student housing, it's actually pretty good. All right, so there's a set of concerns and anxiety that can kind of drive you nuts. But when you look at the actual data, it's actually far more comforting. And because we're going to talk about this other things, there's also trends that are going the other way in terms of de-densification of the on-campus housing, which are sort of mitigating some of these issues. So there is a lot in play. Okay, but the point I would kind of make is, if you look at the top schools, they have money to survive. Okay, the universities will face additional expenses. There's going to be pain, but it's not, I would say, existential pain. They're not going out of business. Okay, there are smaller schools that may come much more so. Okay, and again, because the sticker price of a college education has risen so high, if the experience isn't necessarily what it's worth, then there is some danger. However, again, as the actual data is coming in, off-campus dedicated student housing is leasing up. Okay, so this is where I'm saying is there are higher expenses. You can see that there are budget cuts. They hit home the most among the weakest universities and not the sort of headline university of that state, but it's the smaller colleges that are going to face meaningful reductions. The CSU and the UC system are going to face a 10% budget cut. That's not irrelevant. It's a tough nut to crack, but they've also got a lot of fluff in their systems. Is a question whether they have the political will to actually cut the fluff out and focus on the core mission, and that's unclear at this point. So I would say there's a resorting. The international students and visas, now the administration came out this morning that it's a little more lenient on those that are going online. Will we see some sorting of students, again, in the middle of the economic stack, shift between universities? Possibly and probably. Remember, this recession is mostly not touched folks who are largely driven by intellectual capital in their jobs, as well as their ability to send their kids to school. And so I would say this year it's kind of come away relatively, not entirely, but relatively unscathed. And if you think that this is a one-year phenomenon, which I do think, then we kind of need to see past this year and kind of in a post-vaccinated COVID world. But if you look forward, right, enrollments are down because the population is leveling off and the cost is high, so we don't expect overall enrollments to sort of shoot up. International students were a big source of income growth for universities, up to doubling their size from 3 to 6% of enrollment, paying full price, and that is a source of revenue strain, okay, for the university and to a lesser degree off-campus student housing. And this is something definitely need to think about, right? There are certain universities where this is a relevantly big issue. A lot of them, except for the UC systems, are private universities where there may not be as much off-campus dedicated student housing in the first place. But these universities are exposed to movement international. Again, just a quarter. If a quarter of the students don't show up from overseas, that's a 5% enrollment hit. That's meaningful. We also took a look at universities where a significant portion of the freshmen are not from the state. Again, there's an exposure here, and so these are state universities and colleges. I'd say the University of Alabama being probably one of the biggest ones that have a potential exposure for the university overall. Probably not for the university, the subsegment for folks that occupy dedicated student housing, but yes, for the university overall. Do we think colleges are winning closer to home? Well, let's take a look here. This is early June. Commitments for state residents at the UT Arlington up 26%, OSU up 20%, WKU up 20%. So yes, Jack, we are seeing a shifting around of students, and to the university, this actually is even if they fill the slots, it is less profitable, right? They're going at in-state tuition versus out-of-state tuition. So it's going to put some pressure. Again, maybe not for off-campus dedicated student housing, but for the university as a whole. Will community colleges look better? Possibly. I'd say possibly, but still, if you look at the data on pre-leasing, it still looks pretty good. So what will the fall look like and what we know so far? Let's go back a second. So this is data we're getting from the Chronicle of Higher Education as of July 2nd. 62% are in person, 25% some kind of hybrid, and I would call it a range of scenarios. But the bottom line is, in most cases, if you think about that, combine the two, you're talking about only 15% don't have a purpose to be on campus. So in most cases, the university needs the tuition payments, and the parents don't want the kids there, and the kids don't want to be there. So is it going to be different? Yes. What we're seeing pretty clearly and somewhat normally is dorm capacity has to be cut significantly to allow for some level of social distancing. There is usually some form of quarantine dorm that has to be put together or sort of dedicated. Large lectures are either being held online or alternative attendance days are being spread out, and so they've got to spread it out a little bit. It appears many universities are starting a bit earlier and ending at Thanksgiving break, and then having exams kind of go online. The last couple of weeks of classes go online, and then their increased cleaning was really going to raise their expenses. So these are specific examples of universities kind of following this kind of trend, and I won't go into detail on it. You can read this stuff later, but it all tends to fit in the same concept of they've had a couple of months to build a relatively kind of consistent playbook, and of course all of them have been trading notes and talking to each other. And here's a sort of some hybrids, right? Teams getting everybody there, but mixing up the classes they go to. In universities that really don't have a big off-campus component to house the kids. I'll give you my alma mater. Kind of basically has said freshmen won't go to school in the spring, sophomores won't go to school in the fall, and that's how they'll handle it, right? So, but you got to pay still. So there's some movement along this kind of going on. So some notion of online as well as in-person, as well as synchronous learning. Enough, I would say, to sort of justify the price of tuition. The social aspects will probably be a little more sedate, but from a housing standpoint, I would say this is a reasonable tailwind for off-campus dedicated student housing. This is a notion of the reduced dorm capacity is a real thing, right? If you think about this, the dorms are operating at 50% of capacity or 75% of the capacity, but clearly there are more kids that if they want to go to school, they won't be able to do it in the dorms. What I kind of gleaned onto this from Liberty University, which never closed, ever. They didn't close in the spring, and a lot of what they ended up doing has become a little bit of a playbook for other universities, right? So while they basically set up an annex, a former hotel property that was set up for quarantine. They took extra precautions. A bunch left. They kept the operations open, but they managed, and the world didn't come crashing to an end. And I think out of that, a lot of folks, even though they may not want to admit it, they've kind of tried to learn from these experiences how to put together kind of a program that will work and will get people back to campus paying tuition, even if the experience isn't all the way it would be until, again, a vaccine's in place. So other universities stayed open this past spring, UCLA, Texas A, at much lower, capacities, right, than other universities. But the university had time to figure out how to at least function, and I think now they're in a position to kind of move forward. Now, this is data that we get by calling all the properties in a particular school market, and so here is a bunch of universities that are in person for the fall of 2020 that actually are pre-leasing better than they did last year. UNH, University of Pittsburgh, Utah State, and in some cases getting rent increases, and in the University of Pittsburgh not, and even when the mix was a high number of in-state freshmen. This next slide, this one, let me go back here. Here below, there's also a set of, this is where we talk about the variance. There's also universities that are not doing as well, even though they are getting rent increases on their off-campus housing. So I would say University of Memphis, that's a little scary, how slow it is. University of Denver's picking up some, and University of Alabama at Birmingham getting better. So the message I would have you take away from this is there is a wide degree of variance. We can give you an overall picture, but you do need to understand what's happening at the school level. These are some universities that are planning online only as of the 7th, most of them being in the CSU system. And if you look at these, this is sort of paradoxical, right? These are universities that are going online, and pre-leasing for student housing is better. UCLA, CSU, Stanislaus, I don't even know how to pronounce that, and there are some that are struggling, all right? So Rutgers at New Brunswick, UC Sacramento, and San Diego State. And San Diego State's prices are pretty taking a beating. So you can kind of see that there's also variances, really specific around what's going on with that university market and the supply picture. So the question is student housing, we went through the last recession and was recession-proof. Is it pandemic-proof? Pandemic-proof? I think it's pandemic-resistant again, which is the reduction in the dorm capacity is a meaningful tailwind. Doing online instruction will be a hit, but it's not too hard, and we can see the CSU campus is continuing to sign leases. The value proposition of the school has been a long-term issue, and that's sort of a longer-term grind. But again, if you go back to the data in terms of lifetime earnings, even as expensive as it is still a pretty good investment. And so I don't think that I think we're in for some choppiness. I think if there's sort of brand new lease ups, maybe a little bit of a struggle. Some loans that are coming due, maybe a little bit of a struggle. But I think overall the sector is going to kind of hang in there. So let's just go talk about some fundamentals for a bit. This is the overall national pre-leasing view, which is not bad at all. Again, and started out really strong and lost a little momentum, but it's not so bad. We track, in all the universities, and these are the top 20 with the most dedicated student housing stock. And there is in many of them still a remaining opportunity. But if you get this deep into it, you probably need to start thinking over the next 10 years about how do you compete on a Class B basis if all the Class A students have been housed. There's also reasonable pipelines here, 1,800 beds at ASU in Tempe, 1,250 at CSU of Sacramento. That's got a very large capture opportunity. And even at UT in Austin, there's a decent pipeline. And we track all of these properties in all forms of the development pipeline. So if you look at this wide range of rent growth among the universities, right? So these are the top 15 that are kind of crushing it in terms of rent growth, and then you've got a bunch that aren't due to both supply issues and cost issues. And I was, quite frankly, the most surprised by UC Berkeley, where rents are down 19% and SU down 16%. So tremendous variance that we're seeing in outcomes. If you look at sort of areas of distress, this is a notion where the loans are maturing and the pre-leasing in that university is worse. So that's in the red. The green one is where it's better, and black is about the same. So if you're looking for potential areas of distress, you'd be looking for those particular universities where the pre-leasing is lagging. And we're kind of at the end, and this is sort of like I hardly ever do and never do actually product plugs, but because this is our introductory one, I'll do a plug. But this is the only one you'll have to live through, I promise, and it'll be quick. This is our sort of product universe and where we're adding. So there's a couple rural areas that we do need to add. We cover 2,600 universities. We have dedicated student housing data on 500 universities. 600,000 bedrooms are in the sort of data set. 14,000 bedrooms under construction. So in all of these, and we have created this thing called the Yardi 200, which is all of the Power 5 plus the Carnegie R1 and R2 schools. We pretty much cover everything you need to do if you're in this sector from an investment standpoint. And understanding the shadow market, understanding the sort of situation of the university financially, as well as its housing market, and as well as the pre-leasing curves. And what people are telling us, this in terms of where value is created for them, is understanding the school, the visibility of understanding the school needs, the supply pipeline, the shadow market, the ownership sales and data. So this data all came from, really, most of it was university data that we already had, but we hadn't organized it by the university. It was mixed in with the conventional assets. And so we've called it out, beefed up some of the specific data points, and added in university profiles. So we are at 37 minutes or so since we started. Where do we end up? And then sort of opening it up for questions, right? Universities are going to struggle. They've got more expenses. They certainly don't have more revenue, okay? There will be some state funding cuts. It will hurt. There will be less profitable students. So the university itself will be under pressure. At the same time, they need to stay in business, and they are more business-like than they are truly sort of nonprofit institutions. They need revenue to keep body and soul together. They're going to open. Schools that are, as you can see this, schools that are forced to rely more on tuition, most of those are going to reopen in some fashion. They need the revenue. From the data we're seeing on pre-leasing, students want to go back, whether it's in person or not. But there is a wide divergence. The college experience is going to be different. Some universities will struggle. Think of this as it's a 1 year, in my mind, 1 year of pain. It will accelerate some pre-existing trends in terms of the weaker liberal arts schools that were smaller and weaker financially. They may not make it, and a couple have already folded. The stronger universities that have large reputations, largely diversified revenue bases, they'll survive. And in fact, for all off-campus dedicated student housing, we may even thrive out of all this. So that's, what I would tell you is I remain kind of guardedly optimistic, generally positive. It's an interesting time. There's an interesting opportunity in the next 10 years to continue to innovate in product. And this is a brand new category that kind of innovated over the last 10 to 15 years, certainly over the last 20 years. So a brand new segment that basically identified a need, found that need, filled that need, and has done it at returns that are very attractive, really based upon this notion of buy the bedroom leases, which is what makes it so profitable and so attractive. So Jack and Chris, I will turn it over to you to hit me up with any questions that have come up or anything that I did a bad job explaining. Fire away.
Conceptually, one of the things that came up is whether or not it's likely that some of the housing is going to end up as distress, and whether there's a likelihood that there will be a pipeline of distressed properties coming along in the next few years?
If you think about it, this is all about, are they going to make their lease ups, right? So distress is a question of if when a loan comes up for maturity, at what value will it be repriced, right? And so that's a valuation issue. We don't have a lot of data points on sales transactions. You would expect values to be down 5 to 10%, but you know what? If you don't have to sell or you don't have to refi, you're probably not, if you're not under financial pressure to do so. So what distress will occur will be, deals that they're having a difficult time getting refied. And there's a list of those. We know which ones those are. And then it's a question of who makes their lease up and who's got the operational chops to execute on the lease up. And we've seen there's variance across universities. There's a variance along properties within those universities. Ones that have stronger reputations and good product have leased up very well. Properties that started their lease up this year late are struggling a bit, and we see that in some of the data. So I think I would say it's going to be a rifle shot, Jack. There's not, as a generalized blood in the water here, but there may be, places, specific, properties that just kind of stumbled and aren't backed by, sponsors who can ride through, these challenges.
Sure. There was an interesting comparison question too about whether or not we would be more bullish for college towns dominated by state schools compared to schools in primary markets that are private.
Interesting there. The issue with the schools that let's take schools that are in gateway cities, right? And are largely served private. So that would be the New York, Boston, Chicago, San Francisco's, LA's of the world, right? Where, the student housing there is there is some dedicated student housing. It's mixed in, obviously, there's a very large shadow market because it has draws off of that. And what's the attraction in the past had been, you go to a great school, you're also in a world-class city, and you get the best of everything, right? So that all that is great. And for the university, for the off-campus housing, you got the draw off of potentially multiple universities. I'll have to drill into those specific. What's interesting is nothing screams out in the data so far on pre-leasing that those universities are being hit because of concerns about public safety or COVID, right? Otherwise, we'd have seen dramatic fall-offs in their pre-leasing activity in the data we were looking at. So it seems not to have impacted them to near the degree that one might have hypothesized. But I'd have to dig into the actual, into the New York properties or the Chicago properties or the Boston properties to sort of give you a better feel for that. But it doesn't stand out, which would tell me that it seems to be running through okay.
Okay. Chris and Megan, I know you have some questions.
Yeah,
Jeff,
we've
this is Megan.
Go ahead, Megan.
One question that came in, sorry, Chris, was how do you see off-campus C-class housing being affected as opposed to A-class?
Well, so understand C-class off-campus housing is really a shadow market, right? You don't really have dedicated off-campus C assets. And that is going to be, affected and probably, probably most affected because those folks their parents may not have the ability to send them to school, right? If they were sort of hurt financially and they were sort of just being able to get onto campus and now their financial world is kind of shaken. So I think there's a greater exposure there. There's also probably a greater exposure to those assets, not now, but if the stimulus payments don't sort of re-up in some form, and a lot of those residents on the conventional side were in industries that are basically face-to-face, I think the exposure in Class C assets is likely to sort of get worse as the tail end of the year progresses. I think not now. There's too much money sloshing around, but that is a potential area of weakness. Yes.
Jeff, we had talked a lot before the call about some of the hybrid models or universities only going one semester versus the other. That seems like it would be an ideal opportunity for students to have a short-term lease, but do you see any of the operators moving to a shorter-term lease than a year?
No, and there's really no. I mean, what's the financial incentive to do so? You'd only do so if you had a problem leasing up, right? I mean, that's why you do it, if you had no other alternative, and it doesn't seem to be the case in a generalized sense. So, doesn't seem to be an issue at the moment.
Okay.
Beth, do you think there will be collection loss issues if there's a second wave and schools shut down again as they did in the spring?
For off-campus dedicated student housing, it's guaranteed by the parents. At the rent levels we're talking about, the operators are very sort of crisp on this in terms of tracking the average income levels of the guarantors. And so the fact of the matter is their collection loss was de minimis in the spring, and I suspect it will also be de minimis in the coming academic year. There's too much credit rating risk for the parents not to meet their obligations, and the fact of the matter is, even if the kids have to stay, they're going to stay. There's probably more risk in them coming home than staying exactly where they are throughout the academic year.
Awesome. And what are you seeing happening with amenities for off-campus student housing? Is there an amenities war, and do you see that continuing after the pandemic?
Well, if you think about this in terms of the last 10 years of dedicated student housing was in fact Class A, and Class A, if you're competing for the brightest, shiniest thing, you're gonna have an amenity war in order to make your property the most attractive from an overall living experience, and that has happened. And for the deliveries that are going to happen over the next couple of years that were previously conceived, it's going to continue to happen. And you may see those amenities shift to maybe more food delivery, right? It's already been a Wi-Fi in the pool and the common study areas and other sort of the volleyball court and the amenities like that, recreation based. You may see some shifting around of that, but the rents are there to support it. I think that the bigger sort of question for the industry is if you look out 10 years from now at the core universities, right, that still are the basis for the Power Five, you'd say, is there an opportunity to build new Class B housing, right, which is dedicated student but at a lower price point to continue to basically steal share from the shadow market. And that, I think, is going to be a level of, can you deliver the product, right? Because the land is probably not going to be all that different, and the bones aren't going to be all that different. So you're going to have to get enough savings from kind of amenity space in order to justify, a 15 or 20% lower price point that would effectively compete with Class B conventional, yet be on a per bedroom basis. So I think that's the bigger issue as we go past this kind of, I'll call it, bump in the road. But that's an issue for a later day.
Jeff, any comments on cap rates and your view for where cap rates are going for student housing?
Well, first of all, the thing to note is interest rates are lower, right? So all the other things being equal, cap rates would go lower. But there's a level of uncertainty on the direction of cash flows. And so right now there's just not that many transactions. So most people in their internal models are probably keeping cap rates stable and offsetting. And we really won't see this until there's some movement on what the direction of cash flows look like. And I don't think we know that until the spring, honestly, and we're through this. And I just don't think there's going to be that many transactions that happen. The ones that do happen will probably be at a lower price point because the sellers have to sell. And the only reason the buyers are going to be induced is that they've got a deal or they got some prized asset and they're looking past this bump in the road to get their hands on an asset they couldn't otherwise get their hands on. But I think cap rates will not move substantially. And again, in a paradoxical way, when more clarity occurs, you'll probably see an uptick in interest rates as well as a decrease in the risk premium. So I think it's more of a question of income modeling than it is the cap rate itself.
Okay.
Jeff, although pre-leasing looks good, is there a concern about pre-leasing not showing up in the fall and only, say, 75 to 80% of pre-leasing showing up in actual occupancy due to economic factors of the families?
Well, when pre-leasing happens, a lease is signed and a commitment is made. So the financial commitment has occurred. Okay. So if students don't show up, the financial commitment is there, and now you've got a collections issue to track down. So is there a possibility of that? Possibly, but it's mitigated by the guarantor that most dedicated off-campus housing providers require. So small factor, not a huge factor.
Jeff, an interesting point here about universities partnering with multifamily operators in the shadow market. Do you see that happening, or is that more of a competitive situation where they want to keep students in the dorms?
Well, I think the issue is, right, if a university needs to clear dorm space and they go out into the market and the dedicated off-campus student housing is already filled, they have no choice but to talk to conventional operators and take down potentially a master lease. They don't have a choice. I think their preference would have been normally to go first to the off-campus dedicated student housing where that you have a 4x4 or 3x3 that has a structure, right, that is conducive to privacy. But there may not be enough beds, and so again, for the ones that are adding capacity in that situation, that's actually a tailwind, right? You could master lease your property for the first year and take pressure off your pre-lease. So I think that is encouraging for, I'll call it, the non-university owned sector in general. The area that I would say there's a little bit of concern is if you formed a JV with the university to operate their dorms, but now the dorms aren't going to run at capacity, and everything was based upon the assumption that dorms are running at capacity. Well, that could be a hit, because that was a very favored investment strategy, and quite frankly, in the long run, makes a ton of sense to partner with the university to provide dorm housing and capital investment that they couldn't do on their own. It's just that this year may be a tough year for those JVs because they're going to have to thin capacity down. Long run, I still think it's a great idea. It just may be a tough year for them to deal with that.
Yeah, makes sense.
Jeff, do you think the pandemic could affect community colleges in a positive way, with less university housing to offer more attendees at community colleges, meaning more students renting shadow market off-campus housing?
Well, the real issue would be, in my view, it's if you have a recent high school graduate, that this experience, we were just 6 months ago in the tightest labor market in 50 years, right? And companies were clamoring for labor, talking about doing their own training programs, apprenticeship programs, because it's a very tight labor market, and it was tightest at the bottom end of the skill level within the labor market. That's where the tightness was. So if those high school graduates and other recent graduates, high school graduates, don't have a college education and are now not in a tight labor market, I would think going back to a community college to acquire certain, coding skills or certain there's still a shortage of plumbers, electricians, and tradesmen, would be a very attractive approach, but that doesn't give rise to demand for off-campus housing. It just means that, quite frankly, a better educated American workforce was actually in our national interest. So I think that would be a good thing, but I don't think it really translates into the sector that we're discussing.
Great, thank you. Can you speculate on why we are seeing such variable rent growth among universities?
Well, a lot of it is the sort of demand-supply situation at each of the universities. It doesn't take a whole bunch of new lease-ups to sort of throw off the demand-supply balance. It also doesn't take a lot of some initial hesitancy or some group that's shifting from out-of-state to in-state. So you just see a lot of movement among the universities and their particular demand-supply balances and their plans. So it's quite frankly a little bit of a mystery that requires kind of deeper analysis. I think in this sort of initial pass through, we've tried to address some of the basic issues, but I can't say that we've addressed and drilled down every particular answer to every particular question. I think what we're trying to gather as well is our own sort of research agenda as to what we should be looking at to help facilitate transparency in this market, and would encourage you guys, obviously, to check out the data service we have, that it gives you visibility into this as well.
Awesome.
Jeff, what do you think about like shared common areas? Things like the gym and everything can be closed down,
Yep.
but mail rooms and laundry rooms, how do you kind of regulate that in the student housing environment?
Really tough, right? So, I mean, just like any common area, common laundry, anything common is going to have a problem. One, with having to require masks, right? Because that's an issue. Two, some probably limitation or rotation on access to make sure that it's not overcrowded. Certain things may be certain off hours where it can't be kind of appropriately supervised. So those will be changes, modifications, adjustments that are going to occur on off-campus housing as well as inside the university. Across all of this, it's going to be, a challenge, to run an educational experience, yet keeping people distant from each other, or and more likely is going to be the use of face masks to reduce the exposure time. And what we do know about the disease, and I have said it before, is close contact with someone over an extended period of time, breathing in their droplets or aerosols, is how infections spread. So big parties, big gatherings, football games, big parties, on-campus parades, those things are the problem. They're not going to be able to happen. It doesn't mean that someone can't have an educational experience, but the social experience that goes along with it is going to be significantly curtailed. And that extends to the amenity space as well.
Jeff, do you think student housing floor plans with quad units will suffer because there is a shared common area?
Well, not so much. The economics are definitely great for everyone in terms of a cost per bed. But even if you have a tri or even a duplex, it's more than one, but it is a contained number, right? So I'm not so sure that that's really going to be too much of a problem. The fact of the matter is that any, sort of living situation, right, that's not individual is going to increase potential exposure, right? Because if I'm in a quad, I'm exposed to 3 other people and the people that they interacted with and the people that they interact with and people that they interacted with. So yes, it's a greater exposure. But it doesn't appear as if it's having an impact at the moment.
Great. Do you anticipate any special liabilities for student housing owners or operators during the pandemic if someone from the tenant base is tested positive?
Well, there's some real issues here about notification to the other residents. And I do think there has to be an obligation on part of the operator that if someone does test positive and has to go into a quarantine dorm, they're going to have to communicate that to the other residents that there's been an exposure. The real question is, and nobody is safe from legal liability, right? But I guess it always gets down to a question of the proper duty of care. Did the operator do everything in their reasonable power to keep people safe, to enforce appropriate social distancing, to necessitate using a mask? But there is no legal immunity for any business, right? For any operator, for the university as a whole, there's no legal immunity. So this is something that we're all going to have to sort of tiptoe into very carefully.
Great.
Hey, Jeff, thinking long term, once a vaccine is developed, things will just go back to normal. Is that a fair expectation?
Well, I think the sort of immediate sort of crisis will pass. The real question is what lingers beyond it. And the part that may linger beyond it is how good an education can you get online? Now, remember, there's always been some universities that were online universities, always from an off-campus perspective, always. So we're likely to see the university model continue to be under pressure. What obviously can't be replaced is the sort of social experience, which is going to be most relevant for those who can afford it. But for a larger set of population, the real question is the university model itself, the business model, begin to break down? Because if you can get an education and you don't care about the social aspects and you can't afford the social aspects, can you get an education that gets you a degree at a much lower ticket price and puts pressure on the university financials and the business models? That is an issue that's been brewing for some time. It's an issue on the table, and I think that will be one of the longer term ramifications of this, which basically mean that on-campus enrollments may be under further pressure for those at the lower third of the economic scale, or basically those who aren't subsidized to be there. So it's really going to be the middle of the scale. The upper scale can afford it. The lower scale will be subsidized. It'll be the middle of the income stack that may really take a good hard look at the economics of education. Okay. Where are we at, Megan, in terms of time?
I think we've wrapped up the questions.
Fantastic. So if you could wrap us up, thank you all for the time you've spent with us. So happy to discuss this with you. Hope you've enjoyed the time together, and thank you so much. Why don't you wrap us up?
Sure. Thanks, Jeff. And thank you, everyone, for participating in our program today. We hope you enjoyed it and found the information and viewpoints helpful. If you would like to subscribe to any of our free research, please either log on to yardimatrix.com or contact us and we will add you to our distribution. A recording of this broadcast and accompanying slides will be available after the program. A special thanks to Jeff Adler, Jack Kern, and Chris Nebenzahl for their commentary today. I would also like to thank Jeff Muth and Mary Chu for running the web program, and Claire Anhalt and Maddie Winship for their contributions to the content. This has been a production of the Matrix Division of Yardi Systems, Inc., copyright 2020, all rights reserved. This concludes our broadcast. Thank you.